There's quite a few emails, obviously, since we didn't have any webinars last week. There's a quick question about gaps in the market and why the market comes back to refill the gap. And it's there's no sort of clear reason as to why, but it's just a phenomenon that I've always noticed, that it should come back and fill the gap. We can see gaps such as here on the Aussie, back in March, comes back and fills. There is obviously a large gap this morning, and it hasn't quite filled it by the look of it. If we, the low here was, what was the low there? You can visually see that that's the low there, and hasn't quite filled it at 63. And there's a 3 pip gap there that hasn't filled just yet. So it's not a hard and fast rule that it's 100% certain, but generally the market will come back in and fill. So you'll see this price here at 63 trade. It may not be today, it might be tomorrow or the next day, but generally that those gaps do come and get filled. It's just a market phenomenon. So just got an emails that come in this morning, and we'll go through those. Looking at the Aussie CAD, someone's in this and saw this reversal bar, so has moved the stop in after trying to short it off the swing lower, swing high, I'd say. So he's closed his stop in, which is a good thing to do, and has got in to the dollar rand. Actually, this one was the one I was wanting to look at. Yeah, that's gapped open. Yeah, I've got into the dollar rand as well. Must have gone in yesterday, on Friday, on this large bar here after this swing low here, and that's a reasonable entry, you would think, as it bounced off this support line. Yeah, so that's good entry, and you're sitting in that, trading it long. Okay, next email I've got is Ezio's kindly gone through all the spreads for us, and he's been trying to work out what the pips are for the rand. And as we know, well, I've often said that AxiTrader are incorrect in the way they quote it, that the dollar rand should be to the 3rd decimal place, and we can see here that the spread is generally between sort of 6 and 30 pips. He's gone on to say, what you can see here is the dollar rand. This would suggest that it's to the 4th decimal place, and so by that, from 0206 to 0577 would suggest it's a 350 odd pip or 370 pip spread. And can you have a copy of this? This is freely available on their website. All of these, what's shown here, you should be able to find on their find it on the AxiTrader website quite easily. If I bring up AxiTrader, I'll show you where to find it on their website. Sorry, computer's running a little slow. If we can go to webinars, really quite slow. Come on. When you get the chance, can I ask you, it's still worth considering? whilst that's loading up, the dollar lira, the Turkish lira, yeah, you could look at it. Obviously, your entry would be you'd be placing a limit buy order. I like the fact that it's come back to test these levels here, and I think that's the 78.6 fib, somewhere around there. So yeah, it's just a matter of placing a limit order where you expected to get in, which was at 22.50, somewhere around there. It's trading at 22.84, so it may come back and fill that in. So is that anyway? I don't know why that's taking forever. I'm not going to bother with it now, but you'll be able to get it from their AxiTrader website. Okay, this is a different company's forex.com, their spreads, and we can see here it's dollar rand is 55 pips. Okay, so what this gentleman's done is basically said this: you can come back and pause this and watch it later afterwards on the YouTube. But in effect, if this was the third decimal place, so you got 1020.6 to 1050.7, that'd make it from 102. You're talking like a 20 to 57, so a 37 pip, as he says here. If it was to the third decimal place, it'd make it 37 pip, and that's what I generally agree with. But for some reason, Axie want to make it to the fourth, and you need to trade with what your broker is showing you. So it's just a point of interest, really. But appreciate that, and it's always helpful for people to do that. Okay, moving on to the pound Swiss, the euro pound. There's we've got a slight divergence here and a slightly higher low, but clearly a lower low in the momentum. It's a bit of a support level here. It's also the 61.8 from the last time it was on the 200. Okay, 60. That's that one there from that high. Okay, so it's come back to test the 61.8, bouncing off the 200 EMA and a trend line that is discovered. So could stretch it to a triple bottom of strong support. Could stretch it to a triple bottom of strong support. Okay, so you may think that this is a $1.50 is a nice triple bottom here. That's fair enough. Certainly starting to accelerate and head. That's your target. That's okay. I'll be curious if you're in the trade after the two bio bars. You'd be looking at that trade there. So pound Swiss. When did you send? You sent me this morning. Okay, so you got in on the 20th. And you got taken out on the 29th on this day here because of this reversal bar, and that would have been a small loss, was it, or break even? Then there was another entry on the 31st which I took, and now it's a small profit. Comment on my trade management on the initial trade. Well, I think you've done the right thing, is get your stop loss to break even. Obviously you weren't to know at that point in time if it was going to continue down. Momentum was sort of in the middle. It could have gone either way for you, but it was good that you got back in, and now you're running at a minor profit at this stage, but no reason to move your stop just yet. So your trade management was, to me, is okay. Yeah, sure, if you'd stayed in the trade, your stop was under here, now you'd be making more, but that's hindsight talking. I think you did the right thing. you're still with me. Dollar Rand. Setting a target there, the dollar Rand. Oh no, this is pound Swiss. Oh, that's okay. This is your why you're targeting that. Fair enough. Yep. Dollar Rand. This is showing a decent entry for Monday. The risk reward is too low if you use a standard price action stop. However, I used an ATR trade management, works out okay, so I'm considering it. Well, it might have been a trade for Friday. As you suggest, it's still a reasonable setup. You might perhaps look at the lower time frames as another option. The only problem with the lower time frames is obviously with the spread being 30 pips or 300 pips. It's going to be a little hard to swallow, but I think that there may have been a trade there for Friday. It's a seller bar, so you might have backed away from it because of that. But as you suggest, there's still, we expect the market to be accelerating or moving higher from this support line, and that would stand to reason as a reasonable trade. And you've got a target there which gives you a risk reward 2.1. That's pretty good. Yeah, certainly floating along that trend line there. All very good. Okay. I've got a few emails of admin emails. I'll get to them after this webinar for you, those who you're expecting a reply. Okay, dollar sec. This came in on the Friday. Dollar sec 4 hour. Trend continuation, 4 hour higher highs and higher lows. Horizontal support, mojo high on the weekly. Okay, so that's that one. It's obviously over that, getting good cyclicity along the 20. That would suggest the 4 hours doing a phase 2. Just found the 61.8. Okay, fib level is off a strong horizontal as well as the bounce off the 20 EMA, which is respected. Price action is quiet, but there are 2 consecutive bars. There is divergence. No divergence on the daily. Yep, no divergence on the daily for sure. Not yet. That's all heading in the direction. So 2 consecutive bars, and you should have been thinking that this is not the trade. Momentum is telling me that the price may pull back to the 50, and it is Friday. Okay, well, there's no shame in not taking the trade, but that would have been a winner. Although your stop might have been here and you got taken out on this bar here, so maybe it's the right thing to do, depending on where your stop was. Although your stop I would have had the stop, no, not that far south. Yeah, I would have had the stop under there and could have quite easily got taken out. So there's no shame in walking away from a trade if in doubt, so that's a good thing. But there was a well spotted. You like those little Scandinavian 4 hours, don't you? Yeah, good stuff. Overnight, the dollar NOx stopped out. This was Friday morning. Your 4 hour. Okay, so that must have been Thursday in here. You got stopped out, alright. And you did finish October positive, which is good. Nothing stands out for today, but we'll look at the 4 hours on the Russian ruble. Okay. It certainly had a bit of a turnaround on, I think, Thursday night. Yeah, massive turnaround on Thursday night. Yeah, good luck trading that. Just leave that one alone. Leave that one to the Russians. Alright, this one came in on Thursday. Dollar in long. Okay, to me, I mean, obviously you may have would have hit your target on Friday at $12.50. It's a little bit late getting into the trade here. I'm not sure exactly why. That's should be looking at the cyclicity on the shorter time frame. Something like the 4 hour. Or even the 1 hour, which is in here somewhere like that. But your entry off this above the moving average is horizontal support, and there is a minor support here, and then FOMC comes out. I think is this FOMC? I think it must have been. FOMC Wednesday, then Wednesday night, and Thursday, and then the BOJ. Just not sure of your entry. I mean, normal conditions you wouldn't be taking that, because you'd be looking at something, your risk reward ratio, and you're trading in the middle of the trend, and so I don't necessarily agree with that entry. Obviously it's paid off for you. Risking 1% too on it. Risking pips is 115. Target would have been about 200, so roughly 2 to 1. Well, it's done all right for you, but I think that's not the strongest of entries. And I know that you were. So we'll just look at this. Earlier in the week, you were looking at going short here, and just on this, I'm not exactly sure why you're looking to go short. Yes, it's reacting to the 61.8. But clearly we can see this is an uptrend, and that there's phase 1, phase 2, and now we're in a new phase 1. And we should have been looking to go long here, or if not that, then where most of us got in, then you got this little swing low here, and you could have gone in there. That's where you should have been getting in. Getting short here is not ideal, and it doesn't fit any of our trade criteria. Fib extension, you don't have an extension in there, you've got a retracement. So remember, anything between 1 and 0 is your tracement. Okay, So extensions are the 1 point something. So that was a bit of a question, and I know in the boot camp last week you saw that and got out of it, but I just don't think that means you should be jumping into it, on the long side. As I said, would have got to your target this morning, but nobody knew the BOJ was doing this. We were expecting it. I've been expecting it all year, but only 3 economists called that it was going to do. Out of 38, only 3 of them said the BOJ was going to do it. So it was hugely unexpected, and that's why you get that reaction. And obviously that's paid off for you, but to me that's more arse than class, really, considering your entry. Okay. Come on, computer. Thank you. Okay. Dollar Rand. This one came in on Thursday. Got another trade on the knock. Looking at this on Thursday, and yeah. So you sent this on Thursday. And so you traded on Friday, so it's doing alright. Bullish engulfing bar off this major support line here. Yep, bullish engulfing. It's fine. Yellen GDP, Rand PPI. Yeah. As we know, that's running bullish engulfing bar. Okay. So you went off that. Look, it was probably a little early. And then when you did get the higher low, it's a seller bar. I think that going in there is probably a little early, but again, it's paid off for you. Strong US dollar is paying off for everybody, which is great. Everyone's making money. But yeah, I think that's just the one bar. You've got all this selling coming in here, and you just got this one engulfing bar. Not really strong enough to my mind, to warrant an entry. And Thursday bars was a high low, but it was a seller bar, so there's a potential for a trade on Thursday. But with all that selling, you'd probably only put a little bit of capital behind it. But it's obviously now paying off. So, right. Just confirming, I've cancelled this pending order this morning on the CAD Sing. CAD Sing. Phase 1 trend continuation. Let's come back to this resistance line. Let's come back to the 61. Placed that order and cancelled it. This came in Wednesday afternoon. Cancelled pending order because the bar was engulfing bar. Okay, well, that's the right thing to do. I know the CAD got a bit weaker on Friday night, but what did it do on Thursday? Yeah, so Wednesday, Thursday. So because of this bar, you've cancelled it, and that's the right thing to do, because it's obviously not ready to go short just yet, and still not with this huge bar like this. You're not going to touch it with a 10-foot barge pole. So lucky we didn't trigger in, and so yes, you should cancel the order. So the right decision was made. That's good. Aussie CAD. Attached is my final draft Aussie CAD. It's also Wednesday night. I think, yeah, coming in off this is just a little aggressive. TP2. I think that's just a little too aggressive. Off this high test bar. That said, you then get the selling, you come in here. By the look of that, that would have hit your TP1 anyway. And then we get a reversal bar, and you should have your stop here. So I think the proper entry is on this bar here, underneath this low of this bar. Yep. So coming in underneath the low of that. So you're trading on this day, and your stop's up here. And now with this reversal bar, your stop should be there. There's nothing wrong with your analysis. You've got your 50 fid there, the 50 EMA, it's a high test bar. It's just, I think that's a little aggressive. So when you're coming in and aggressive like that, you should be using far less of your capital, because they're being that coming in early, not yet seeing a full complement of selling. You've only just really had one day. Then you should, it's an increase in risk on the trade, and you should obviously use less of your capital behind it. And then if it does trade and you get the confirmation, then you can add to it, add some more capital to it. But yeah, a little early, but your analysis is fine. If I do put in a pending order for this currency pair, I'll send through another document with lot size. Okay, cool. And as I said, the CAD got weaker on Friday because of their GDP came in weaker. Alright, e-signal on MetaTrader. Yeah, just be aware that US is now on daylight savings, so it's 9 AM. The bar MT4 I've got here is 0258, so that's right, which is GMT plus 2, as you can see. So if you're adjusting your e-signal charts to reflect MetaTrader, then it's GMT plus 2 that you need to have your e-signal set to. And the 4-hour rollover, if you set your e-signal to GMT plus 2, then the 4-hour will roll over at the 4-hour bars will look the same as your MetaTrader bars. But there is a website that it's called Hub Investor, HUBB investor.com. It's a free version of charting package. So if you're only using MetaTrader and you're not using e-signal, because MetaTrader only goes back to, on some pairs only goes back a couple of months, and some pairs only a couple of years. So if you're looking at the monthly, that goes back to 98, but not all pairs will do that for you in MetaTrader. So you can use something like hubinvestor.com to get that historical data. Thank you for sharing with that, Paul. Okay, just a couple more to go through. Pound US. I haven't placed any order of this currency pair. This came in on Tuesday night. Haven't placed any order because of the FOMC looking to maximize the potential. Okay, left shoulder, head, right shoulder, and it's come back down to test the head, so This head and shoulder pattern is now looking decidedly over. Not sure what these purple lines are. That's your neckline? No. Okay, with the pound, that's the left shoulder, as you've identified, that's the right shoulder. So the neckline goes from the left shoulder rally, the high point of that, to the high point of the before it drops down to the right shoulder. So these two, that's your neckline there. Okay, and obviously it failed to break through the neckline, and it's now the head and shoulder pattern is null and void because we're lower than the right shoulder. So I wouldn't be calling this the head and shoulder pattern now. I think it's non-existent. It was looking like there was a head and shoulder pattern, but you know, I think this is heading down into the 50s, 7s around here somewhere. We had a lower high, lower low, lower high, higher low, and the same, barely a lower high. So we're still getting lower highs. There's just this little low here, and this was the FOMC run up to FOMC. So you know, it's hard to sort of say, well, let's get short here because this low here should have beaten that low. But now I would suggest that this will beat that low, and so therefore there may be opportunities to look at this trade in the cyclicity of this shorter time frame, because the daily is well in the trend, still got room to fall. But there's, like that dollar yen trade the gentleman did, it's too late to trade this on the daily, and so you'd have to look at the shorter time frame. But I think there's still opportunity in there. And same with this one, there's still more downside to come on this thing. The US dollar is very strong at the moment. Okay, CAD Sing daily. There's the pound. Wait for retest and break of neckline. Yep. Option 2, trend continuation, false reversal, wait for lower high, bearish price action. Potential wait for break of the horizontal at 60. Across here. Okay. And FOMC didn't bring that. It wasn't until the next day, so yeah. Draft attempt analysis. Are these reasonable options? What should entry? Well, your entry is, once you get the neckline right, your entry is off the swing low off the neckline. When it does a break over and swings underneath it, as I said, on the daily there was no real option to have a proper crack at it, but now there might be on the shorter time frame. Okay. So coming to you, I was just getting smoked. We just had our building approvals, didn't we? That's not so strong, I take it. Internet's far too slow, but I'd say that's what Chinese non-manufacturing PMI and building approvals have just come out, and I'd say that that's what's sending this a little weaker. Okay, so back to the CAD Sing. This is from the 28th, so Tuesday. This is from Tuesday, and so yeah, that swing high was looking like an an option, but it didn't trigger you in. So that was that swing high there, and would have only just not triggered you in. So the low was 23. You should have been looking at it around 17, something like that. And the low here was 19, so it was only by a couple of pips that you were not in the trade. Sell stop. Entry is 32.67. Oh, sorry, 13.26. Really? 13.26. I thought it would have been, the low is 13.23 there, so you should be looking at an entry of 13.17, and the low on the following day is 13.19. So you shouldn't. Your entry price is wrong, of 13.26. Your stop loss, in fact, you may, yeah, stop loss well and truly got taken out. But had you had the proper entry in, I'm not sure why you've gone that price. That was the closing. Yeah, your entry price, your entry for hours is 5 pips below the low of that day. I'm not sure why you've chosen 13.26, which is around the close of that day, but we're going, you can see the low there is 13.23.6, so our entry should be 13.17, so down here. Just be careful of that, because that would have saved, had you had the right order, that would have saved you from getting into that trade. But otherwise your analysis is okay. Not sure what these lines are. Got that top and that top. Yeah, doesn't mean much to me, but you're saying trend line resistance. Okay, 1, 2 tops. Yeah, but if you're going to do trend line resistance, you just use the trend line like that. And so yeah, you could have said that there's trend line resistance there. Yep. And horizontal resistance. You don't have horizontal resistance in there, but you have this blue line, which is fair enough. Okay. Oh yeah, sorry, horizontal resistance, yes. Okay. So just be careful with your entry price. And the final one, it's looking at this euro dollar. Remember this, it started to, we were looking at getting short here, trend reversal, and then it had the FOMC push up. Okay, a couple of things here. Trend reversal, you want to see the trend reversal when your momentum indicator is oversold, or if it's in an uptrend, overbought. We can see here that we're getting lower lows and the momentum indicator is turning and getting higher lows. You want to be seeing that around this the 20 mark, if you've got your bands on 80-20, and it's at that point we go, okay, well, we're at the end of phase 1, I'll be able to get a trend reversal trade going. These red arrows mean nothing to me. They're not really showing me anything at all. In fact, prices, the momentum indicator is following price, so that's in convergence. We need to see divergence. As you see from this low here to this low, you'll see this is a higher low in your momentum. Okay, so I think we need to revisit that. Also with your Fibonacci, Not exactly sure. Okay, not exactly sure why you've drawn that. Where you've drawn it. It doesn't make sense to. It's out in the middle of nowhere. Again, if you're looking for a, for example, if we're looking at trying to find the end of phase one in this instance now, you draw the previous uptrend, and you've got in here somewhere it may turn. Okay, so this little thing that you've indicated means nothing to me, and if we have that one there, it's really too far. It would be very hard to get an extension in there, but not so much now. Okay, so I need you to do some more work on. We'll go back through the book or the DVD of the course to revisit trend reversals. Fib extension 0.786. That's not an extension. Anything between 1 and 0 is a retracement. These green ones. It's what's beyond that. Yeah. So we can see. If we draw this, right, between 100 and 0 is your Fibonacci retracements. Your extensions are the one, anything with 1.2, 1.6, yep, 2. That's your extensions, and so what you've drawn, it really doesn't make much sense to me. We need to sort of revisit things. It says you took your course in May, but you've been away, unfortunately. I'm sorry to hear why, the reasons for it, but yeah, I need you to really sort of restart again, go through the course, go through the book, and maybe the video DVD. Okay. That's it on the emails. So just had a final question from someone online saying pound yen, where should I move my stop loss? Is 78.73 too close? Okay. Well, all the yen crosses would have been doing extremely well. As I said, nobody would have expected them to the BOJ to do what it did, but it certainly gave a boost to the bloody price action. Kiwi yen, NOK yen, peso yen, Aussie yen, double top, Euro yen, also double top up there, Swiss yen, yeah, range bound all of them, CAD yen, dollar yen is obviously motoring. Alright. What was the question? 78.73, huh? Well, again, it depends on, you might have seen me, I've got my stop out here, and it may look like it's in the middle of nowhere through this bar, but it's a combination of that Fibonacci level and ATR. Plus it's, I do have a target up here, and I'm trying to get my account back in positive, and this is obviously going to, this trade here now with the stop loss there will bring my account back into positive, so that's another reason for it. But generally you'll want to be looking for a level that the market can find you support. So if we draw something like this, there's nowhere really there. Maybe something like that. If we come back to the daily, what did you say your level was? 78.73. Yeah, that could well be it. If you also look at take this bar out of the equation, your ATR was sitting at around 120 pips. So 120 pips off the close here. Closed at 79.64, so that'll bring it to 78, 78.40 as a level, being 120 pips from the close there. So that's again underneath that that horizontal level. So maybe maybe just bring that 78.73, just drop it an extra 20-30 pips down into 78.50, and I think that should be a-okay. That. So what do you want to see? You wanted to see my MT4. Sorry, my Fibonacci. Okay. So Fib. What are you wanting to see? With 0, the order that they appear here doesn't really matter, because when you draw it, it'll work it out. I've got space, dash, space, then the percentage sign, dollar sign, and what that does gives you the price. When you put this percentage and dollar sign, it gives you the actual price that that level's at. So I've got 0, 786, 382, 50, 61.81, 1.618, 1.272, and 2. And then these extras, which you don't really need. In fact, I'll take them off. Okay. Is that what you're after, mate? Okay, if there's anything else? No? Right, guys, well, that's pretty much it for today. We've got another webinar on Wednesday, and depending on the number of emails, I shall go through all the currency pairs for them on that day. Everything else is sort of in the middle of the phase, middle of phase 1. So maybe by the end of the week we'll be looking to exit trades, or there are some as US dollar ones that are starting a new phase 1, such as the lira and the rand. But you might get some runs at the end. Sorry, the phase 1's finishing towards the end of the week, and maybe a phase 2 trade, but potentially looking at closing trades. So we'll go through them all on Wednesday. Otherwise, if you've got any questions, shoot me an email. You guys have a lovely day.